Hello, Monday, coming at you live here at Inside Production Studios in Phoenix, Arizona. My name is Robert Morales, and it's Monday Market 15, the only 15-minute show that takes about 30. So grab your coffee, sit back, relax, and we're going to bring you some information about the Phoenix housing market. I'll be taking questions here live during the broadcast, so just add them at the bottom of the screen as you see fit. And I'll try to get to those questions either on or before today. We tend to have, or after today, but we tend to have a lot of stuff I got going on here. So I'm going to try and share as much as I can in the least amount of time possible. But be also hit that heart emoji because I love those loves. And if you're on YouTube right now, smash that subscribe button because, why wouldn't you? Oh boy, I'm flying solo today. So Gabby is out, Violet's out, Kelsey's doing her thing. I'm all solo today. So I got a lot of information for you guys that I'm going to try to get through because it is informational. I think what I wanted to start with regarding the Phoenix housing market this week, it's week, 7, 8, is knowing your competition. I think knowing your competition while you're out there looking for a house is probably the best thing for you. And so let's see, I'm going to go to my first slide. Go into the first slide. So what I wanted to point out is really this market, if you're in the market to buy a house and your household income is roughly about $56,000, you are in the median average bracket. And the affordability of that house will bring you down to about a $215,000 house. And home sales nationally are down in that bracket. And largely because of, the rate increases and the purchase price of homes, we're seeing a decline in this Phoenix market of anything and everything under 300,000. So the heavy competition, anything under 300,000. So what I wanted to do too is kind of show you guys a little bit. You should see my screen right now. I got everything everywhere. What I wanted to bring you was this slide here. So in that bracket, if you're that median household income of about 56,000 in the Phoenix market, you're looking at very slim pickings as far as like houses goes. So houses out here. Hola, Melissa. So houses out here, we're running at about 105 listings under 250,000, as you can see here. So not a whole lot of inventory out there for the median price of households in the Phoenix market. And this is single family, by the way. There are more when it comes down to condos and townhomes. But I think the main focus right now in our market with every home purchase or home buyer right now is going to be in that single family home or household. So I included in here, there's quite a number of condos, and we're going to get into loan programs a little bit. But as you can see, there's a very slim pickings as far as like houses out there. So going back to knowing your competition. So I found it interesting because, I told you guys in the weeks before that I'm in the housing market to buy a house, and I've come across a lot of situations and I've actually made some offers on some houses, and we got outbid by cash buyers. So I'm like, I want to know how many cash buyers we have out there. So I did pull some more stats out, and again, there's so much all over the place in front of my screen. And I'm going to trip over and get to this one. Boom. Cash buyers. So individual investors and second home buyers who account for many of the cash sales purchased 15% in January, up a modestly 14% in December. So only about 15%. So less than a fifth of buyers out there are cash buyers. And so what was driving me crazy, what had me thinking was that these cash buyers were outbidding, all of us. I put in an offer in Mesa, I want to say about 3 to 4 weeks ago. And when I called the listing agent, I said, how many offers did you get? And he said, we got about 42. Which is nuts. And he told me they only responded to the cash offers. He didn't tell me how many, but it's just hilarious how much, cash is out there. Doing real estate for the last about 8 years, you'd always want that one cash buyer to come in and just say, hey, I'll buy it cash. It was a rarity to get a cash buyer, but in this market, everybody seems to have cash. So that tells me people are pulling from other investments, and we can get into it. But I think they're using a lot of these cash sales, or I should say, cash purchases for investment vehicles. And if you get into finance, you can watch our finance show on Friday. We could talk a little bit more about that. But I think a lot of people were parking either their retirement savings or whatever cash investment they had, some stocks, some bonds, whatever. They cashed them out and they put them in an investment vehicle such as real estate because it tends to be a little bit more stable. But if you want to get into that more, we can kind of get into that Friday. Just tune in on the show at the lunch hour on Friday. So again, if you like what you're seeing, go ahead and hit those heart buttons because I love those loves. I love the support. If you want to support me, if you want more information like this, go ahead and hit that button down there. So going into it further a little bit, again, I thought initially my competition in buying a home myself was the cash purchases, and not so much. Again, less than a fifth of that. And then I wanted to get into loan programs a little bit. What I'm seeing too is conventional loans are tending to be the loan that people pick. If they don't have a cash offer, these sellers are picking, conventional loans, typically more than just the minimum down payment. So minimum down payment on conventional is 5%. So I see them selecting a lot of 20%, if not more, people waiving appraisals, which is not advisable, by the way. Do not waive that appraisal. Waiving inspections and all this stuff, buying really crappy houses. Okay, I shouldn't say crappy house. I should say houses that need some repair, if not significant repair. People getting emotional, which I'll talk about too. I did want to point out some loan types in this market right now. This is all National Association of Realtors information, if you guys want to look it up. So the loan product types right now are conventional, composed about 73 roughly percent of all loan applications. FHA was about 16%. USDA is about 0.9%. So USDA is completely off the chart. I mean, if you go on the USDA website and look up the map demographics, I mean, you really have to be out there to qualify for USDA. So that wasn't a surprise. But VA was a little bit of a surprise too, because it's really the lowest component of all four loan types there. And VA is typically it is a 100% guaranteed loan, and I believe that a lot of these sellers aren't selecting FHA and aren't selecting VA because of the number of criteria they have to meet. Some extra fees they have to pay. FHA loans themselves, there are certain fixes, repairs that have to take place in a home for them to qualify. And, a lot of these sellers, because they're getting multiple offers, because they're getting over bid price, they're not selecting those loan types. So if you're out there, again, knowing your competition, knowing what you're up against, if you have an FHA loan, you face some, significant competition. I was fortunate enough, one of my sales in December, we were able to negotiate an FHA loan on a townhouse, able to get seller concessions, which was amazing to me. And then after the appraisal came in, it was 20,000 below what we offered. And the seller just happened to select, our offer and agree with the appraised price, which was fortunate for the buyer. And she was a very happy camper. Water break. So I did want to point out the competition out there. Let's see, we're a few minutes in. We'll be here a little bit longer. So hang in there. Again, if you have any questions, go ahead and type them in. We'll get to them as we go. So I did want to talk a little bit, again, a bit of a surprise this last week regarding mortgages. So a lot of the information that's out there is just out there. I think people send out, it's really clickbait. You see it on dating sites and you see it on news reports. And so there's a lot of information that can be misleading, and people typically just read headlines. When I read a headline regarding loan applications in off the MBA, I read this, January home purchase applications increased by 18.9%, which is great. And I'm like, okay, that's not a surprise to me. I go and I find this other article just a few days before. Let me see if I can find it. That's not it. As you can tell, I'm not organized today. I'll get to that in a second. But I saw another article as I get to it that said that loan applications were down, in the beginning of the year, which was a conflict information. Obviously, I'm reading one report saying that applications are up regarding new home purchases, and then another article saying that they were down. There is so much misleading information out there that it's confusing, and often you have to reach out to a professional or somebody, at least in the industry, whether it's a mortgage officer, whether it's a real estate agent. Everybody has their perception, everybody has their skew. The best thing that you can do is be as well informed as possible, and make a decision for yourself regarding this housing market or whatever's happening. Yeah, I couldn't find the article, but I'll post it. I'll post it at the bottom later. So what I wanted to get to in the second segment of this whole thing was the emotions, the frenziness of this whole thing. As much as I want a buyer to buy a home, as much as I want a seller to sell a home, sometimes you get caught up in the emotion, the frenzy of things. This is an article that kind of talks about that. It hints at it. There's bidding wars out there, people offering over asking price, over really their budgets just to get a home. And, sometimes things just don't make sense. And it really, if it doesn't fall within your budget, it doesn't make sense to you. Sometimes you need somebody to kind of guide you and kind of knock you upside the head a little bit and say, you know what, offering $40,000, $50,000 above asking price isn't probably always the best situation for you. If you're an investor, that's a whole different story. If you have money and you want to park it, you can use real estate. You can use this market as an investment vehicle, because in the next 7 to 8 years, we do cycle through. We do come back. I sold my house after the big, 2008 crash. I held on to it a little bit longer, probably than I should have. I wanted to sell it off, but it went from, I think we initially purchased it at 280. This was back in 2002 or 2004. Bought it for 280. The market was just going up crazy like it is now, going up to about 2008 when we had the crash. We had a real estate agent tell us, well, just hold on. If you hold on a little bit longer, it could get up to 350 and you could sell it off then. That was actually the way he sounded. So we held off, we didn't sell it. And when the market crashed, that initial $280,000 purchase turned into a 190. I looked at it on Zillow. I was watching the trends, and was it a smart decision? At the time, sure. We wanted a home, but it took about 7 years, six and a half, roughly. After about a few tenants, we rented it out, and it climbed back up. And when we finally sold that thing, it was, like I said, it was about 6.5, 7 years later. We sold it at a loss of like just $2,000. And I was so thankful it was just $2,000, going from like 280 to 190, and then over 6-7 years builds back up to just about the amount we owed on the loan, and only having to pay $2,000. That was awesome. I thought that was a good transaction. So, all that to say, do not let your emotions get the best of you when you're making those decisions regarding a home. Whether it's a decision for your family, because there's just so much volatility right now, not only just in prices, but unemployment too. Unemployment last week was announced, 800,000 was about 100,000 more jobs or people filing for unemployment than was anticipated. So you saw kind of like a stock fall off. You saw the markets just adjust for that. And you're seeing a lot more of that too. I saw an article today. There's a frenzy out there. This article talks a little bit about the 10-year treasury. So you can go in and go to the Wall Street Journal and pull this article. But the thing that caught my attention was regarding the 10-year yield. As of Friday, the yield of the benchmark 10-year U.S. Treasury note stood 1.344 up from 1.157%, just 5 trading sessions earlier, and roughly 0.9% at the start of the year. So what is a 10-year Treasury? Oh boy. Let's get into that. I did pull something for you guys so you can see what it is. And it clearly a little bit defines it more. So a 10-year Treasury is a 10-year yield used as a proxy for mortgage rates. So essentially that yield going up, that roughly, I want to say 0.2%, that yield roughly going up 0.2% was kind of one of those things that stirred the market up. And you would say, well, 0.2% doesn't really mean anything. Well, what does really 0.2% really mean? So I went ahead and did that for you guys too. If I can pull it up. Nobody's here today, so I'm here by myself trying to get through this stuff. So what I wanted to do is calculate roughly right now, the interest rates for a mortgage are about 2.5%. So as this graph shows you, $300,000 home, $15,000 payment, down payment, so the 5%, interest rate at 2.5%. After all your payments, this is amortized calculator. After all your payments, 30 years has passed, you finally pay off your home. That $300,000 is roughly going to translate to 581, which is amazing. So you think you're buying a house for 300,000? No, you're really paying, after all the interest is paid, 581. So I just want to point that there while we compare. So again, going back to the 10-year treasury, why such a stir in the market would happen over something so seemingly so small, a 0.2% yield change is, would concern so many people and get them in a frenzy. It's because of stuff like this. This is the exact same price of a house, exact same down payment, 5%, but you increase the interest rate by 0.2%. You're paying, roughly, what is that, $50,000 more. So we went from 540 to 592, and that's some money, man. That's some big money. So causing a stir in the market for something so minuscule, seemingly so minuscule, can cause a frenzy. And right now, this market is so volatile that any change, any kind of news will change things significantly. One market affects the other. Stock markets, 10-year treasury, every market affects each other. Differently, of course, but they all have an effect on each other. Let's see, what time is it? It's way past 15 minutes though. So if you like what you're seeing, go ahead and get the heart emoji, because I love those loves. And if you have any comments, just go ahead and comment them below. So the last thing, what I wanted to talk about, what I wanted to be somewhat optimistic about is, if you're a home buyer out there looking for a home, there is some good things and probably not some good things to look forward to, but it is what it is. And that's the truth of it. Looking for a home right now is such a challenge. If you wait it out a little bit, you may have an opportunity. It comes at a consequence too. So at the consequence of some concerning things. So the next slide I want to bring to you, the last part of what I wanted to share with you guys today. Black Knight is a data collection agency. So they collect data regarding mortgages. And in their estimate, currently, there's the number of properties that are 30 or more days past due or in foreclosure is about roughly 3 million. So 3 million across the nation is a fair amount of people not being able to pay their mortgage, not being able to continue to make that payment. So in essence, this is a concern. A concern when you have such a number of people not working, unemployed, as well as not making their mortgage payment. What does that lead to our future? Could that mean a rise in inventory? Of course. I'm going to give you some other things to kind of make mental notes on. Again, this is not something to be worrisome about, but it is something to concern yourself with when regarding making decisions in your family, regarding making housing decisions. One of the things I wanted to share was trustee sales. So this is just a graph showing you trustee sales, if you can see it. I don't know if you saw that. Hold on one second. These are trustee sales. So in 2019, we had roughly 300-ish deeds of trust. So these are houses that went in foreclosure and the deeds got sold to the trustee. The trustee goes and sells them. So people went into foreclosure, had to leave their home, had to physically walk away. In second quarter of 2020, that significantly dropped by about 200, for the past year. And if you look a little bit further, we're running at about 300-ish foreclosures a month. Things are getting sold off. And then when we drop to 85, so roughly 200 a quarter, that's 200 times 4 quarters. Where do these houses go? That number from Black Knight, the one I just showed you, could be where this shadow inventory is hanging out. People not making their payments. People who didn't make their payments back here are most likely not making their payments here. So that's something to kind of look out for. So these are deeds that have been sold to a third party and have been sold off foreclosure. So I would say about 200 a month. And so one of the other charts I wanted to show as well was this one. This one's a notice of trustee. So people who are delinquent, going back to that Black Knight information, about 3 million are in foreclosure. These are at risk of going in foreclosure. Notices of trustee, sale by month. So again, same thing. We have a large inventory. Sorry about the. Oh, so you can see here. We're running at about 400. I'll just say 400. So we're running at about 400 deeds of trust, or notices for trustee sales. So again, people who are 30 to 90 days delinquent, drops off in quarter 2, 2020 to about 75. So again, large segment of people in this section just absent, who are not making their payment, or at least at risk of losing their home or being sold to a trustee. So again, something to look out for, making those decisions later on in the future. I believe that would lead to an inventory flux, especially since March is the eviction moratorium where it's ending. And then right now, current legislation where the mortgage moratorium is looking like June, we cannot continue the mortgage moratorium the way it is. Just simply, people aren't getting paid. Banks aren't getting paid. So people who work at banks are employed by banks who get paid by people who make their mortgage payments. So after time, if those mortgage payments aren't made, it's going to have a cascading effect to every industry. That also includes taxes. Taxes aren't being paid. It also includes insurance payments. So the insurance company is getting paid who's employing a number of people to insure these homes. So what does that mean? That means a lot of stuff. I'll let you draw your own conclusion. However, I do have some predictions. So if you're a buyer and looking for a home, I do have some predictions. This market isn't going to go away. The way things work in the housing market, it's like an elephant, very slow moving. You'll see some significant drops here and there, but it's very, very slow, somewhat predictable based on circumstances. What I want to show here is when we get to a balanced market really means a 6-month supply of inventory. So that means we have enough houses to buy for 6 months. And the unfortunate part right now, today, pull this up, we're running at about 0.5 months. We have about a half month supply in Phoenix. So this is partly why prices are going up, partly why there's so much competition is because we do have a supply issue, not so much that we have a buyer issue. I think, looking at all the information that I come across, are a lot of investment purchases. A lot of those buyers coming from California to invest here are starting to dwindle away. And the real aspect of that, the thing that I'm physically, tangibly seeing is that when I'm making offers right now, there are far less cash buyers. I went from one transaction, from one purchase offer, we went from 40 to 45 offers on one house. Now we're running at about 12 offers a house, which still is very competitive, but also at the same time, a good sign that things are slowing regarding that. There's these cash investors, these people with large sums of money who are coming in and buying cash are starting to dwindle away. So people that actually qualify for a home loan are starting to be able to make those purchases. Again, if you're conventional, if you saw on the first slide, if you're conventional, you are in a little bit better situation than some of our FHA and VA people. If you're FHA or VA, hang on there. There's still some opportunity. The opportunity for you guys, for everybody looking for a house right now, I think is in the new construction market. The new construction market is a lot, I think, better as far as competition goes. There's not so many of those price gouges. There's not so many of those price hikes. I saw one new builder who did a lottery or an auction essentially for lots that was down in Florence, but a lot of them are doing lotteries where they just kind of select people, and they're not raising the price 40,000, 50,000. They are raising the price incrementally, but at the $2,000 to $3,000 a month level, not the $20,000 to $40,000 level that we were seeing early on this year and late last year. So there is some opportunity there for buyers that are in the FHA VA realm to go into new construction. I think that's where the key is for you guys. Conventional, if you're conventional 20% down or more, you're looking pretty good right now. I think we'll start to see less competition. I still anticipate price hikes over the next few months. I definitely believe there's going to be some shifting, not only with the housing market, but the stock markets as well. I do a little bit of investing too. So tune in Friday, the Finance Friday Frank at the noon hour. We can talk about the housing market and then some of the finances there too. But some of the upcoming things, I think we will start to see our inventory increase. As evictions start taking place in March, you'll have these investors start selling those properties off. So you get a little bit of inventory there. And I believe that will start beginning of April, and you'll start to see more inventory come July. If the forbearance moratorium comes off or is removed in June, I still will believe you'll start seeing more inventory at that point in August, September, October. And do I believe there will be a balanced market that's 6 months supply? At some point, yes. Do I know when? Absolutely no. Do I believe that's going to be somewhere? I want to say October to December this year. Things will finally calm down. And when I mean calm down, I mean being able to negotiate something. Several years ago, a seller used to do things like offer home warranties, offer credit towards carpet, in the form of like $2,000 or $3,000. You don't see that today. I do think in roughly towards the end of the year, you'll start to be able to negotiate on homes a little bit better as a buyer. So if you're in the market to sell a house, this is probably the prime time. I don't think you'll be able to capitalize on some of these increased prices as they stand right now. I believe they'll still continue on for sure, but we will see. I think there'll be some determinations to be made come the end of March. I'm still waiting. I told my fiance this weekend, let's hold off till mid-March to see kind of where we're at. If people start filing those evictions and those forbearances start coming on market, I think there is some tremendous opportunity for a purchase market. It's unfortunate for some people who are losing their jobs, who aren't able to make their payment. I've talked to 2 people this weekend alone who are not working, who are concerned about losing their home. One renter, one homeowner, and it's a very real thing. And like I said, there's some things happening, and you have to be as informed as possible. Don't get caught up in the rat race of like following one lead or the other. Facebook is probably the worst, even though I'm on Facebook right now, as far as information goes, because it just feeds into whatever narrative you believe something's happening. And you really have to extend yourself to get more information from different areas to make a concrete decision regarding your home purchase or what you want to do regarding this market. So with all that said, I think there are some opportunities with the forbearance market. We should have some inventory coming up there. With unemployment, I believe people will fairly and roughly all at once start selling their homes, knowing that they're not going to be able to make those payments anymore. And then it's unfortunate, with that. I think when people start selling off their homes, the rental market will increase sometime at the beginning of next year, if not the end of this year. But yeah, that's all I have. I don't know how long that's been. I think that's exactly 30 minutes. So if you have any questions, if you have anything you want to comment on, if you want more information regarding anything else, this is kind of the stuff I do on a regular basis. And every week there's so much information to bring you guys. It's hard to kind of pick which is more important. But hopefully with the information that I'm sharing with you guys, that you become more informed, that you a little bit more informed as far as making your decision regarding a home, regarding living in Phoenix, what you want to do, all that good stuff. But if you want to call me, you can call me at 480-528-8486, and the information is down below. Thank you. This is Robert Morales for RCO Network, and this is Monday Market 15. And I'm losing my voice. So we'll catch you guys next Monday. Finance Friday is noon Friday. So if you guys want to know about stocks and about the financial market, Thursday is our unedited show where we talk to new business owners and entrepreneurs. So tune in on Thursdays at 5 o'clock and catch that show, and Friday at 12 to catch our finance show. So until then, we'll see you guys. Happy Monday. We'll see you possibly next week. See you guys.